So long term, medium term is also known as trend following, right? So trend following, you always want to stay with uptrends and stay with them as long as your uptrends remain intact. So this is maybe, we're in the section now where we are identifying uptrends or identifying trends. And we've discussed so far that we want to be focusing on uptrends. That we want to be focusing on uptrends, not downtrends, not sideways. Now this is arguably, or actually, in fact, the most important slide in this segment. Because what it does is that it helps you operationalize, or it gives you, from a principle point of view, how to operationalize an entry within an uptrend. So I'll go back. We talked about support first. Support, essentially the line that connects your lows in an uptrend, or your support line, the line that connects the lows. If you want to define it very simply, support is essentially an area, a price area in the chart that represents heavy buying interest. Which means that pagdating sa level na yan, maraming gustong bumili. You guys follow? It means that when prices hit that level, there's an abundance of buyers that are waiting to buy shares at that level. Which means that if you're buying a stock, and you want to buy a stock and you want it to move higher, it means that yung support line mo, yan yung parang baluarte mo. Which means that when the seller or your enemy, let's say you're a buyer, comes close to your baluarte, it means that there's a lot of buyers that can actually buy that seller out, right? So a support area represents an area where there's a lot of buyers. In the same way that a resistance area is a price point that represents a lot of selling interest. So in an uptrend, if we draw a line here that represents your support line, this is your resistance line. If we connect those highs over here and we make a line over here, and this is your resistance, the line that connects your highs, and the support, the line that connects your lows. So this is the important part. For me, when people ask me what my normal day is like, I always tell them that majority of the time, 80-90% of the time, I'm always watching the market. I'm watching the market, I'm reading research reports, I'm talking with clients, writing research, etc. But there's that 10 to 20% of the time where I find prices either at support or prices breaking out of resistance. So those are the two windows where I need to be acting, deploying funds. You guys follow? Which means that from a technical analysis point of view, 80% of where you're supposed to be entering, where you're supposed to be buying. Remember, technical analysis is not just a study of price. Technical analysis is a study of timing. When to enter, when to exit. And this essentially is us giving away our secret in terms of how to enter using technical analysis. And how do you enter? You enter either at the bounce of support as prices are bouncing, or at the breakout of an area pattern resistance. You either enter at the bounce of support or at the breakout of an area pattern resistance. Why is that the case? Why is that the case? Why do you want to enter as support is bouncing? Why do you want to enter why do you want to enter right when support is bouncing, or right when area pattern resistance is breaking? Yes? Price is going up at that point. There's a possibility that it's going up, correct? Tama yun. That's actually a correct answer. You want to buy because prices are going up at that point, especially when prices are bouncing off support, and you have a whole lot of buyers that are there to buy and push prices higher, right? That's the second reason I'm looking for. What's the first reason I'm looking for? Exactly, right? So what's your name? Navin. Yeah. So according to Navin, you want to buy there because you want to reduce risk, right? So if you look at technical analysis, if you look at the big picture of technical analysis, I explained to you earlier that the top traders that we have, not just locally but around the world, the top traders that we have that use technical analysis usually operate at a 30 to 50, sometimes 60% batting average. One of our top traders today who's up, I think, end of February, he was up 70% year to date. Might be triple digits now, I don't know, but 70% up year to date. I looked at his numbers. And what I found out from the numbers is that I saw that he was trading at a 33-35% hit ratio. What does that mean? It means that 2/3 of the stocks that he would buy, he would lose money, right? But what's the key? The key is that if you're disciplined enough, buying as close to the support as possible, buying on the bounces of support, whether it's a area pattern resistance, like maybe Wilcon, as what we had the past few days, or an uptrend support, like for example, Eagle, which is maybe an uptrend that we've seen the past few weeks. If you're buying on the bounce of support, if you do that for all your trades, what happens when you decide to cut it in 2/3 of the trades that go wrong? What happens when you decide to cut it? Let me ask you something. If you buy it at the bounce of support and prices, instead of bouncing, pierce through that support level, what do you do with your position? You cut your position. Let me ask you something. If you're disciplined enough to buy as close to your support as possible, what does it mean when you cut? Are you cutting small or are you cutting big? You're cutting small. Now, what happens if, let's say for example, you, for some reason, went out, stayed up late the night before, you had a lot of drinks, you had a good time with your friends, you wake up and it's already what? Showtime na on TV. Diba? Pagising mo, showtime na yun sa TV. 12 o'clock na, you see prices are already midway. And you decide to buy it. You decide to chase prices instead. You become emotional and you say, shit, ang tagal ko nang binabatiin yung stock na to. And then I missed the window and then you decide to buy it. And what happens if it goes back down below the support? Are you cutting smaller or are you cutting bigger? Are you cutting bigger, right? So the key, if you want to know what the biggest breakthrough is, at least for most traders, myself included, including some of the traders upstairs, is that it's when you start taking care of the risk management portion, when you start taking care of your losses, then you put yourself in a position to start making money. And you have to think about it. When you're starting out, imagine mo, yung mga professional traders namin that come to the office 7:30, 8 o'clock to read the news, to go on meetings, review their trades even after, people that devote themselves to trading. These traders sometimes bat 30%, 50, 60%, right? If you guys are going to start to do this, you're going to start out, obviously you're going to have to deal with the same batting average or possibly better, even less, right? And the only way you're going to be able to get through that is you're able to manage your losses, which means that the reason why we want to buy as close to our support as possible, as close to the pivot, meaning when prices even break out of resistance, like for example, what broke out of resistance? Let's say, for example, CLI, Cebu Land Masters, the past few days broke out of resistance. You want to buy it as prices are breaking out of resistance, as close to that resistance point as possible. Why? Because when prices go wrong, and it's going to go wrong a lot of times, you want to be able to take the minimal loss as much as possible. And this is very important. Understanding risk management. The reason why technical analysis works, ironically, is because of its ability to control the risks through cutting losses. If you're going to do technical analysis and you're not going to be cutting losses, huwag ka na mag-technical analysis.